Hello guys, welcome to the Wealth Made Smart channel. Today I'll share with you how you can start investing your money and build personal wealth. Some time ago, Warren Buffett said, "If you don't find a way to make money while you sleep, you will work until you die." That's a very important reminder, because if you don't want that to happen, you need to build passive income. And one of the most common ways to do that is by investing in stocks. So here you can see a heat map of stocks. Each stock is part of a specific sector. For example, manufacturing, healthcare, energy, real estate, and so on. Every day, these prices go up and down, depending on market news, performance, and trends. Let's take an example. We'll look at GOOGL, Google, one of the most well-known and traded stocks. Here you can see the stock chart since August. The stock moves in waves, sometimes up, sometimes down. Your job is to learn where the highest high and the lowest low are. You can draw levels and observe how the price reacts. Our main goal is simple: buy when the stock goes down and sell when it goes up. Let me show you a case. Google stock had a drop when bad news came out about a monopoly issue and Apple possibly stepping in. So, the stock dropped sharply in one day. That's where smart investors often buy, when the stock is undervalued due to news but still has strong fundamentals. If you bought one share, you could have earned almost $20 profit within a week. Now imagine you had 5 or 10 shares. Not a huge investment, but still a decent profit. Now let's take one of my favorites. Nvidia. We do the same thing. Mark the top high, mark the bottom low. You'll see it doesn't make much sense to buy at the very top. You never know if it will drop right after. Instead, we look for a support level. That's usually where the price bounces up. If you bought Nvidia at that level just a few months ago, you could have made $50 per stock. Does it always work like this? No. Nothing in the market is guaranteed. But in many cases, it does work this way. Now you might ask, but how do I know which stock to actually invest in? Here's a simple way to understand it. Think of every company like a kid. Would you give that kid $10,000 and hope that when they grow up, they'll pay you back 10 times more? Let's look at what you'd want to know first. The first thing, what are this kid's personal goals? If he says, "I want to be the world's best doctor or start a charity," you might believe in his potential. Same with a company. They need a clear vision, like Apple saying they want to lead innovation in devices. Second, who are the kid's parents? Do they drink and ruin his future? Or do they support and educate him? For a company, that's like having reliable partners, suppliers, and teams. If they have weak support, their growth will suffer. Now think of the environment. If the kid grows up in a poor area with no resources, it's harder to succeed. A company in a dying market, like DVDs or oil during transition, will struggle. But in a growing field, like AI or electric vehicles, they have more chances to thrive. Next, the country. If the kid lives in a peaceful country with good schools and opportunities, success is more likely. Same with companies. A business based in a stable economy will have better conditions to grow. But if it's in a country with war, inflation, or dictatorship, it might face serious risks. We can go even deeper. Does the kid live in a safe region, or are there earthquakes, hurricanes, or other problems? Same for a company. Regional issues, like floods, strikes, or supply issues, can have big effects. Then there's the global situation. If the entire world is in crisis, even great companies suffer. Like during COVID, when almost all markets crashed. Let's take Apple. Personal goal: lead the tech world. Support system: loyal customers, strong brand, dependencies. They rely on China heavily. Market: they're in a strong position, not many rivals except Samsung and Xiaomi. Country: based in the US, very stable. Region: safe. World: slowly recovering. So, is Apple a good investment? That's your choice. But now you have the tools to analyze it smartly. So next time you're thinking about investing, ask yourself, would I invest in this kid's future? If the answer is yes, and the signs are strong, then that's probably a good stock to consider. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and leave a comment. See you in the next video, here on Wealth Made Smart.